Afternoon, everyone. How are you? I know some people may have been in the previous session. So if we're repeating, hopefully we can get some questions answered, but also, welcome to everyone who is here for the first time. Can you see the screen? Can Wika or someone confirm if you can see my screen?
Yes, we can see your screen.
Okay, great. All right. Good afternoon, everyone, and pleasure to be able to chat with you today about impact investments. Apologies, I've actually got the wrong deck. Let me switch to the different one. But looking forward to speaking with you today about impact investors and specifically understanding, what is it that you need to know about impact investments in terms of who are investors and what are they looking for. So what we'll do today in terms of our agenda is we'll start with just a very quick introduction so that you at least know who's Open Capital Advisors and why am I qualified to be speaking to you about this. And then we'll talk a bit about the options and what funders are looking for, and then we'll go very quickly through a high-level view of what the fundraising process is. So that gives you a chance to understand what does the investor universe look like, what are they looking at, and then what would you need to do if you want to raise capital from impact investors. As we go, if questions come up, obviously we'll leave some time at the end for some questions, but also please feel free to put them in the chat, and I'll try to address them. Oh, we've already got questions coming in. Great. I'll get to those in a moment. Hopefully we can answer those as we go through the presentation, but we can answer at the end as well. So very quickly, just by, maybe you can, raise your hand with the option there, or maybe put in the chat. Anyone who is planning to raise capital or looking for funding in the next 12 to 18 months, either put, just yes or your name in the chat, or add that, raise the hand function. Okay, we have quite a few people looking for money, which is the lifeblood of any business. So great to know, that we've got that many options here. And what we'll then do, and obviously I think there's going to be a lot of questions. Let me tell you a little bit about Open Capital. I'll spend about 30 seconds, 1 minute on this. So we're a management consulting and financial advisory firm, founded in Nairobi, but about 10 years ago. But since then, I've worked across the continent. You see the countries there, East, West, and Southern Africa. We work with businesses, we work with investors, and we work with development partners such as Prospero. But really, what's relevant for this session is how do we help businesses to scale? And a lot of that is also helping them to raise capital. So to date, we've helped our clients over the last 10 years raise about $700 million, about 40 million of that for Zambian businesses. And that's across sectors. So our clients have included folks in energy, financial services, aquaculture, agriculture, and a number of others. And those are Zambia clients specifically that we've worked with. So that's a brief overview of who we are. I'm a principal with OCA and lead our Zambia office and our work across Southern Africa. So with the brief intro out of the way, let me jump into the content that is really important and what you're looking to know and understand here. So to start with, what are investors looking for? I think before we do jump into what they're looking for, let's think about what the universe of investors looks like. So there's a whole host of investors out there. We ourselves work with more than 300 of them, many on the continent, some in Europe, America, and a number of other geographies. But what they're focused on and their priorities are quite varied. Some, are looking at just impact, and you'll see that on the left-hand side there, who are looking at impact first and really care about what do you generate in terms of impact for the money that I give you. And then others on the finance side, they're really thinking about a commercial return. It's what are you giving back to me in terms of my finance? And I'm making the return that I've targeted, and don't really care as much about how you generate impact as a result. And if we expand that out a little bit, this gives you a bit more of a picture of the world of investors. So thinking about their focus, what type of capital do they deploy? What type of criteria are they looking at when they decide who to invest in? For those on the impact side, Those are the Gates Foundations, the MasterCard Foundations, and others of the world, who are simply giving you money and saying, go out and do some good, right? So whether that is helping to connect people to energy, whether that is helping women and girls education, whether that is increasing access to healthcare, really it's go out and do some good, and what they want to see are those results. And on the right side, these might be banks, right? If any of you have tried to raise from a bank before, what they say is, show me your audited financials, show me your business plan, show me your strategy. Because what they care about is, are you going to make money? And are you going to be able to pay me back and pay back with interest? And then in the middle there, you see a number of different options that are on that spectrum of finance versus impact. And they will have different criteria and different focuses that they have in terms of how much impact are they looking for, how much finance are they looking for, and crucially, what is their trade-off there? If you're able to generate X amount of impact, are they willing to take less of a financial return? So that helps paint the picture of a little bit of what are the universe of investors, because it's important to understand that as you go through that process. The other thing to think about is, what are the investors' motivations, as those are what impact where they focus, including what sector they invest in, including what type of capital they provide, what type of return do they require. Now, if you're looking at, and this is more, we're getting now into the commercially focused investors, the ones who want to see at least some financial return. They are businesses as well, right? They have gone out and they've raised money and told people, we can make you X amount of money, we can generate X amount of impact because we will be deploying this money to businesses on the ground. And they are then beholden to those investors, who are called their limited partners, to provide a return to them and be able to achieve those targets. So understanding that they have other priorities as well, and they have people that they need to return their capital to, helps you then know where are they focusing and why are they focusing there. And the crucial thing is then to make sure you do that work, and we'll talk about that a little bit as we get further in the presentation, to understand those investor motivations so that you can be targeted in your outreach. The other thing to consider is not just what are investors' motivations, but where along the growth cycle of a business are they investing? I imagine there are people in this room, some who have just started their businesses. There are others who have been in their businesses for many years. And as you look at this graph, you need to think about what type of capital is suitable to you. And that's not just because from an investor perspective, but also what makes sense for you. If you're an early stage business, you're not making money yet, maybe you're trying to test your product, make sure you have product market fit, you probably need a grant, right? Something that you're not required to return, but allows you to get to the point where you can start making revenue and start generating profit. If you've moved past that stage and you've started to scale and to grow, but you're not at a point where you're making profits, and more importantly than profits as well, you're making free cash flow, right? You might be making a profit on your P&L, but you're not actually having free cash to be able to return. You can't repay debt, right? Which is what I think most of the financing options in Zambia are, because you need to have excess cash to pay off debt. So likely what you need to do is you're looking at an equity investment where you receive money in exchange for giving someone a portion of your business, and they own a part of your business. And understanding where you are in that life cycle and what type of capital you can take on is extremely important, because that makes sure you get the right financing in. But also when you go out to investors, you're focused on the right investors, right? Because the key thing to keep in mind here is that investors, it's all about risk reward for them. And they're trying to balance risk and what is the reward that they get. So the amount of risk they take needs to be equal or commensurate to the reward that they receive. That's why when you have equity investors, they're taking much greater risk, because the business may not be proven yet. They're coming in at an early stage when you might not actually be making money. So it's a lot riskier for them, which is why they might say, I need a portion of the business so I can share in the rewards as the business grows. Whereas a debt investor, a bank that comes in later, they might be saying, you're a stable business, I know it's not a lot of risk, so I'm willing to give you money, but they're not expecting as large returns, right? So the equity investors, the angel investors, that's the Mark Cubans, if you watch Shark Tank, those folks of the world who are looking for huge returns. Whereas then you have the banks and private equity firms who are much more risk averse and want to see more stable businesses that they invest in. So that's one way to think about the universe of investors. So then you can be targeted in terms of who you reach out to think about where is your business and make sure that you're focusing your efforts on the right investors. Now, once you've gone through that process, you then have a whole process to go through of actually then doing the outreach, preparing your business for investment. So what I want to talk through now is, what are the key things to know about the fundraising process? What steps will you have to go through? And how can you be prepared to ensure you can actually raise capital? So what we often see, we've laid out here, on the one hand, organizations have a founder or a group of founders who are really committed to the business. They know it well, they understand the market, and understand how to grow the business. But there's often things that they're lacking that investors are looking for, right? Beyond you knowing your business well, they want to see that you've developed a strategy and you know how to scale the business. They want to understand how much money you need, right? Often we talk to businesses and they say, yeah, I need, 20 million kwacha. You say, what for? And once you start drilling down and trying to understand, sometimes it seems it's a back of the envelope calculation where you have a rough sense. But an investor will want to know, okay, I'm using 5 million of that to buy this type of equipment because I need to expand into this production line. I need 10 million of that for working capital because I'm going to be buying these specific things. And you need to be able to speak to that in detail, because investors are going to interrogate that. And they're going to go through a due diligence process where they're going to look in depth into your business. And we'll talk a little bit more about that, what you'll need to prepare for that diligence. But that means, there's a whole host of things that typically businesses need to work on to be ready for investment. And that is including thinking about, what is my growth strategy? What are the opportunities that I'm going to pursue? And crucially, what am I not going to pursue? Making sure you have a sustainable organizational structure, but also, how do you grow that organizational structure? What are the key gaps? What are the talent positions that you need to fill in? Who else will you need to bring on to make sure you can actually expand and execute on your plan? And having the capital need and knowing how much you need, what it's going to be used for, and also having all of your documentation, not just your financials, but a number of other types of documents that we'll get into shortly. So those are the important things to make sure you've prepared and you've addressed before you even get into the process with investors. And once you do, there's a whole host of timing that you need to account for. Often when we speak with businesses, you say, when do you need capital? Often the answer is yesterday, right? I need that money immediately. But the important thing is, if you're raising from impact investors, it doesn't take a month, doesn't take 2 months. Plan for at least a year, right? We've seen it take a few months, but that's very quick. Usually you need to be planning, because there's internal work you need to do, there's outreach you need to do, before you even then get to a process where you're engaging with an investor. So don't start thinking about raising financing when you have 3 months of cash left in the bank, right? Start thinking about long-term. Where am I going to be a year from now, 3 years from now, 5 years from now? Based on that, what type of capital do I think I will need, and how much am I going to need to achieve those goals? So you start with doing the internal processes. So everything we talked about on the previous slide, right? Outlining your materials, making sure you have clear communications for investors in terms of your strategy, your financial model, everything that you're going to give to them that gets them interested in your business, because they're going to want to see those documents. You also need a data room, which is going to be, market research and market assessments. It's going to be overviews of your team and their CVs and bios and backgrounds, your corporate structure, information about your governance processes, your internal policies, everything from HR to finance and management. All of those things you need to have ready and prepared, because investors will want to dig into that. So make sure you've done that work to prepare that documentation. And then you move into figuring out, and you can do that simultaneously potentially as well, but looking at who are the investors I reach out to. And that's where everything we talked about in terms of the investor universe earlier comes back into play, right? Given where I am as a business, the sector I operate in, the type of capital I need, my growth trajectory, my market conditions, which investors are a fit for me, right? Because that saves them time and it also saves you time. You're running a business as well as raising capital. Both of those can be a full-time job. So make sure that when you do the outreach to investors, you're focusing on the ones that actually are fit for you, and the ones who will give you time to sit down and say, okay, I'm interested, let's talk. And once you get to that stage, then there's multiple processes with investors, right? You're going to be doing an initial meeting where you share with them and say, here's who I am, here's what I'm doing. And then from there, if they're interested, they'll start a diligence process where they're going to be investigating your market, investigating your business, investigating the competition. investigating your finances and your growth trajectory. And if you get through that stage, you'll get to term sheets where an investor will then give you an indication to say, okay, here's what I think my investment will be structured like. Often those are non-binding. It gives you a chance to start that discussion and have a conversation around, if it is an equity investment, for example, do they get board seats? Do they get a say in how the business is run? Some investors will place a cap on how much you can spend without board approval. So those are all things that will be in your term sheet, and you then need to start negotiating. And crucially, think about those factors before you get that term sheet. What are you comfortable giving up? What are you comfortable sharing with your investor? Now, keep in mind, it's a long-term proposition. It's like a marriage, right? You need to know what is important for you from an investor, because their goal is to make money too. So they're going to help you scale the business. So it's not necessarily a bad thing if they're asking for board seats or involvement in governance, but you need to know what you're comfortable with. And crucially, if you have other investors, what are they comfortable with? And what types of conditions are they fine with you then giving to new investors that come on board? So you go through that, you'll then get into more investors, you'll get to a point where there's more diligence up until you finally close that investment. Now, keep in mind, you will lose investors along the way. Right? You might start with 30 investors that you actually engage with, and as each stage, that will narrow down, and that's okay. And it's tough to get rejection, but that is part of the process where investors will say, actually, this is not a good fit for me. No, I don't think I can invest now. Maybe let's talk later, and be ready for that, because what you need is the right investor, not necessarily a whole bunch of investors. So this process takes time, and I think the important thing is make sure you prepare. Make sure you plan well enough in advance, because it will take quite a bit of time to go through that. I know folks like Carl from Good Nature and Monica from Java Foods are speaking, and those are some folks who can probably give you some insights into what that process tends to look like. And then in terms of diligence, right, I didn't get into detail on the final diligence stage because I wanted to come to this slide to outline some of the key things you need to have ready and be prepared to show your investors. Because it's going to be both a formal assessment, but because Africa still, many of our markets are still developing, there's an informal assessment as well that investors will want to do. They're going to want to see your financials, and often, sometimes in Africa, we have financials that are for the banks or for other parties, and then financials that show the real story. Many investors, if they know what they're doing, are going to ask for the real financials. So make sure you have those ready. Make sure you can explain anything in there that might raise questions. If there was a dip in revenue one year, or there was a large cash outlay taken out of the business, be ready to answer those questions. And sometimes what we'll do with our clients, even do mock sessions to say, okay, here's everything we saw in your financials and your documents that investors might ask about. We will pretend to be the investor so that they can prepare for that. They're going to want to dig into your model. What, if you're processing, where are you sourcing from? What are your manufacturing practices? What are your standards? What certifications do you have? What types of products are you developing? What's your R&D process? As well as from a broader market perspective, how do you stack up to the competition? What makes you unique? What's your value proposition that will allow you to scale in a way that you can beat your competition? As well as then looking internally. And a number of factors, as we said on the informal side, what do your products look like? What is your team like? Do you have the right skills to scale the business? What are the risks around people potentially leaving the business? So there's a number of different areas in terms of diligence that you need to prepare for and have ready so that you can show investors and have that conversation with them. And they will likely challenge you on some of these and ask some tough questions. But if you've done some of that work and the homework, you will then be ready for that. So that's the sense of what to look at. But then what investors will be asking about breaks down into a couple of different areas. One is around entrepreneur risk, right? As I said earlier, they're gauging risk versus reward. So everything is targeted at understanding what is my risk in investing in this business. So entrepreneur specific risk. So they'll be asking things around what skills does the team have? How much money does the team have into the business? Because that shows them how dedicated you are to it. They're going to be looking at strategy and execution. So not only do you have a strategic plan, do you have the right skills to execute it? Do you have the means to go about it? Have you thought about how you will execute that plan? And have you thought about how you will pivot if market conditions change? No one saw COVID coming, right? But the businesses that have made it through are those who have been flexible, who are able to adjust their approach when market conditions change and you need to adapt quickly. Also looking at legal and fraud and other issues around that area. They'll bring in lawyers as well, and you should have yours too that are ready for that. So there's a number of different areas that you need to be prepared to engage in, and be ready to answer questions for investors. Because remember, it's not about being a good company. It's about being a good fit for that specific investor and their priorities and goals. So I'll pause there. I know we had one question earlier, but if there's any others that have come up, please feel free to put in the chat, and then can address those as well. So I see your first question here: do impact investors have a particular industry that they prefer? Good question. The answer is often yes. So most investors will have sectors of focus. So some investors might say, I invest in financial services, in agribusiness, in manufacturing, and in healthcare. I'm giving those as examples, but it might vary depending on the investor. So that's part of the research you need to do, is to understand, does this investor invest in my sector? Do they invest in businesses at my stage? Do they provide the amount of capital I'm looking for, right? Some investors will say we invest between $2 and $10 million. Some might say we invest, up to $1 million. So all of those are things you need to do research for. And most investors do have sectors that they prefer. We tend to see that ones they do not invest in are often what might be called the sin sector, so tobacco or mining, and so on. And some of the most popular ones often are in energy, agriculture, water and sanitation, financial services, education, but you really need to investigate the individual investor. There's another question here. What do investors look for the most in the business they're interested in? Is it business concept, strength of team, year-on-year growth, sound financials? And that was asked at the beginning of the presentation. I hope I've answered the bulk of that in there, but to give some details, all of those are important. And the thing to also understand is that might vary for an investor. Different investors may have different priorities, right? Some might say, look, I'm investing in earlier stage businesses, so I'm more interested in concept. I recognize you may not have a full team yet. I recognize you may not have results, but I'm taking a bet on the concept and on the team, right? Other investors might say, it's really about the team and it's really about strategy. But I think the key things you're going to need to have is, often you need to demonstrate financials, either results, or you can show really good potential to generate return. That is always going to be important for an investor who's looking for some sort of financial return. And you need to have a sound business model. Even if it's early stage and you're still refining it, you need to be able to show this is a viable business model, and also one that is scalable, and can be able to achieve the types of returns that the investor is looking for. And often team is going to be an important component. Even if that's just the founders that you're still at an early stage, even more so at that point, investors are taking a bet on the person or the people that founded the business. So you need to have a really strong team as well. So those are some of the key factors that you'll need to look at, but all of them are important, and it may vary depending on the investor. And then we have another one here: how best can startups with no past performance sell themselves to investors? So I think the question there is really about thinking about what is the right source of funding for a startup at that phase. The challenge we often see in Africa, if you look at the US, there are plenty of businesses that will raise millions before they've even gone to market. And the reason for that, again, if you go back to that risk reward that we talked about, is investors in the US are looking for the next Facebook, the next Uber, the next Airbnb, businesses that can become massive. And if you're an investor who deploys, let's say $500,000 when a business is still early and doesn't actually have gone to market yet, you stand a chance to get massive returns on that, right? If a business goes on to do an IPO. Unfortunately, there's very few companies that scale to that level in Africa. So often we don't see investors that are willing to deploy capital into startups that have very little traction, which is unfortunate and hopefully changing over time. But it's a function of, what is the reward for those investors? So typically what you might want to consider is looking at accelerators, for example, folks like Bongo Hive, who can help connect you with sources of financing, or looking, they call it a round of investing with family, friends, and fools. Folks who might be in your network and, know that's more challenging often depending on your background, but are there people who are willing to take a bet on you and provide some capital? Are there grants that you can focus on and that will provide that. So for example, USAID has a program called Development Innovation Ventures that specifically looks to invest in early stage businesses. So often you've got to be creative when you're a startup, because impact investors or return seeking investors, there's fewer of them who are investing at that stage. So another question here: in your capital raising process, who's your clients? The investors or the entrepreneurs looking for finance, or you work with both? And are you linked to specific funds, or you shop around for investors? So that's a bit more around, our business model. And to answer the question, we work with both businesses and investors. So there are times where we're acting on behalf of a business to help them raise capital. And in that case, we will be strictly on the business's side in that deal. We will not represent the investors. There are other deals where we'll work for an investor, where we might be the ones performing due diligence on a business and helping that investor think about, is this business worthwhile to invest in? What are the capital structures? Is this debt, equity? What are the risks of investing in that business? And in that case, we are advising the business. And the broader question is, are we linked to specific funds, or do we shop around investors? We do not have specific funds that we always go to. As I said, we have a network of more than 300 investors that we work with. And if we've engaged a business and they've hired us to help them raise capital, we will look at that network and decide, based on the business, who are the right investors that are fit for that business. And from that pool, we will then start supporting that business to reach out to those investors after we've done all the work to help the business prepare, right? The financial modeling, investor documentation, business strategy. We'll often help our clients put all of that together. But there's not specific funds. No one pays us to help them find deals. We're going to the investors that we think are the right fit for that specific business. So another question here: does Open Capital assist founders from any industry to look for investors and partners? Yeah, we are sector agnostic. We work across a number of sectors. Our largest ones are agriculture and energy, but also work in financial services, healthcare, water and sanitation, education, manufacturing, logistics and transportation, and a number of others. So happy to chat with anyone who has an interest and needs some support. And a lot of questions coming in here. Are investors interested in equipment businesses, say laboratory and medical equipment companies? Yes, some investors are. Actually, one of my clients right now is a business that provides healthcare equipment to clinics and hospitals, and they have a couple of impact investors who have invested in them actually. So depending on the investor, that is certainly an area of interest, because again, that generates impact, right? Because what you're doing there is you're helping people access healthcare who may not have it before, especially if the clinics or the hospitals that you provide that equipment to, or that you're running tests for, are lower income, and that often is appealing to impact investors. So I've received a message here just saying we need to start wrapping up. So I'll try to go through the rest of the questions quickly, but please share others, and then we can try to address those another time if we don't get to them here. So another question: what are OCA's costs to find investors? That is very much contingent on the amount of work that is required, and how much we need to do to support a business. So I'm answering these ones very quickly. Please give us your email address. We can follow up on that later on. And let's see, any other questions here? What would be considered as a substantial proof of concept by an investor? Again, that depends on the investor and their requirements. Often investors will want to see some level of traction, right? So ideally having some proof that you've been able to grow out and you've actually been able to generate revenue and to make sales. And that may vary from an investor. Some might want to see a couple $100,000 of sales. It also depends on the industry that you're in, and who you're competing against, and what is the kind of the level you need to be at where an investor feels comfortable to deploy capital. But happy to get into that in more detail. I'm trying to get to any other questions. Do we have investors, traditional impacts, who are interested in buying patents? Typically don't see that. Many of the investors that we work with are more focused on investing in businesses. None of, at least in terms of the work that I've done with OCA over the last 8 years, have not seen investors who are trying to purchase patents. But that could certainly be an area to explore. I'm sure there are investors out there who might be interested in that. So I think we've got to the end of the questions. If there's anything else, please feel free to add to the chat. I hope this has been helpful and demystified a little bit about, what do the investor universe look like? What are they looking for? And what's the process that you need to go through? I believe the presentation will be up on YouTube. Afterwards, you can rewatch, pause, read some of the slides in detail. And of course, if you want to get in touch, you'll see there at the bottom, contact information for Open Capital. So please feel free to reach out if there's anything that we can do to help. But thanks again for your time. It's been exciting to speak with you, and I hope this has been helpful.